to tell us more about stable coin payments. Stable coins are probably one of the asset classes that are envisioned to be regulated under the new Virtual Assets Service Providers Act. Let's talk about that. So what are stable coins? And I'll invite each of you probably in a minute, Isaac and Matthew, to comment, unpack to the audience what stable coins are, how they vary from traditional crypto, and why they're gaining popularity. We saw Walmart in the month of June and Amazon announced that I think in a year or so, they're going to stop using card and accepting card payments. They're going to be using stable coins. So the prevalence and the popularity of this type of financial technology is really growing. So how do they work? What are their use cases? Where are we seeing them being applied the most? And how are regulators responding without repeating what we've already said? So we've got 1 minute each on this one. Maybe we can go to you, Matthew.
Yeah, thanks for that. Obviously, we've talked, stablecoins have to be talked about. We know that governments, both the US and the UK, want to back stablecoins as opposed to the other cryptocurrencies out there. And why is that? Because these are cryptocurrencies designed to stay stable. It's like it says on the tin. These are pegged to less volatile assets, like a fiat currency, gold, or other baskets of assets. So whatever that could look like, it could be bonds, for example. A couple of the mechanisms that they do use to keep those stable may be fiat currencies, like we've talked about, commodities. So for example, Kenya could have a titanium or a rare earth stable coin, right? Crypto-backed, so they could be maybe pegged on other more volatile baskets of cryptocurrencies. And so also algorithms. So that's essentially what stable coins are.
Okay, fair enough. So typical use cases in day-to-day, so maybe that we can have some relatable examples. Have you come across, this type of technology being used in London or in any of the streets of Europe? You've tried to access maybe transport or, food, and entertainment, that kind of stuff?
Yeah, so with trading, that's a typical use case of stable coins. They're used in crypto trading, which essentially allows you to move cash in and out of more volatile assets without dumping into those traditional currencies. So i.e. access to dollars. You've heard of dollar shortages, things of that nature. So stablecoin allows that ease of commerce. Cross-border payments is another sort of envisioned use case, i.e. you could pay in stable USD or USD coin instead of US dollars. And because, legislation and what it looks like you've talked about, is that governments are going to back stable coins. Almost every, the indication here now is that almost every country wants to have its own sovereign stablecoin backed by its fiat currency. And that would allow an easier processing of cross-border payments vis-a-vis your traditional SWIFT methodology.
Okay, fair enough. I mean, exciting times ahead. I've never myself used one of these trading apps, but I understand they're quite popular with, crypto technology and what have you. Loads of people are celebrating their 400% plus returns on their crypto assets. But let's move to Isaac. And maybe, Isaac, you can unpack for us, what is the United States up to? What is Donald Trump thinking in terms of his policies relating to the Genius Act?
Yeah, I think we just go back a bit before we go to Trump. If you look at in my view, if you look at mobile money or M-Pesa, it's actually a form of stablecoin, and it's the same principle. My view is always that M-Pesa was the first stablecoin. It's a digital currency, and it's backed by the underlying asset, being the Kenya shilling. And in all our other markets where we have M-Pesa, it's backed by the local currency. So ideally, I issue a digital currency that is guaranteed by the state. Difference with some stablecoins, some are could be backed by an underlying asset. But a majority or the active ones, when you look at now what's happening in the world, USDC, USDT, backed by the US dollar. The oldest, one of the oldest is USDT, that was issued in 2014. Is a dollar-backed stablecoin, USDC, that was recently issued by a company called Circle, one of the fastest growing fintechs in the world. Is also a dollar-backed, stablecoin. So for the Americans, why they pushed for the passing of the Genius Act, it was to ensure that they have leadership within this fast-growing sector. They more or less had been overtaken when it came to digital money or mobile money, for them, understanding how mobile money works, especially M-Pesa, was a key driver. A lot of lots of workshops around how to understand how mobile money works. And the motivation for pushing the Genius Act is for them to take that leadership. Second motivation is obviously to ensure that the dollar remains the currency, the reserve currency of the world. If you start having stable coins that are issued, let's say pegged to gold or to other underlying assets that are not within their control, you would then have the dollar losing that reserve status that it has within the world. So it's both nationalistic. There's obviously a geopolitical angle for them behind that. The Genius Act is for stable coins. They have another one. I'm forgetting the name. The Clarion Act for cryptocurrencies. But that is yet to pass the Senate, so it's still pending with the US Senate. But there's also a big push to have them, approved. The Genius Act, even when it was being passed by the Senate, did not have the usual Democrat-Republican fight. There was, unanimity in having it passed so that they can then take leadership in the world. And you'll see more and more cryptos being issued by American-backed companies. And it's just basically, in my view, having private money as opposed to having public money. We've been used to public money, but now here you have proper private money, and we do have that already in Kenya with mobile money, because the underlying liability is not with the government on M-Pesa. It's within you. If M-Pesa was to have an issue, you'd come to Safaricom. You'd not go to central bank. And that's the same principle with stable coins. But if you're an American, is there a need for you to buy a stable coin when your bank account is in US dollars? That obviously shows you that I don't think there is a need. Their target is the world. The target is not America. America is already a dollar economy. The target is to make Africa a dollar economy, Asia, a dollar economy.
Yeah. I mean, thanks for that, for unpacking, these terminologies, because we've seen them being used widely recently. So first and foremost, I mean, as fintech practitioners, we have to remember that all these are responses to the market trying to generate private currency, like you've rightly put it. In Kenya, only the Central Bank of Kenya is entitled to designate currency under the law. So what we're seeing in these foreign markets is, I like that you've mentioned that, M-Pesa is a form of stablecoin if you look at how it's modeled versus how we are seeing stablecoins being modeled. We've seen the European Union Commission chairperson, or is it president, talking about sovereignty, yeah, being an important issue when it comes to backing of stablecoins. So ideally, to go back to the basics, the way M-Pesa works is that for every 1 unit you have on your SMS, you have a like-for-like backing in Kenya shillings sitting in a bank account, not with Safaricom, but in a trust account designated and regulated by the central bank. And behind that, you've got commercial banks that actually hold the equivalent of the currency. So for every 1 shilling, you have, one for one, like for like. But with